So first wave of tokenization, I would say, was a missed opportunity. And let me go back a little bit in time, what happened around, I would say, 2019, 2020, when you first see a lot of these tokenizations. Now people talk about RWAs, forward assets. At the time, they were called STO, security token offerings. And people really saw blockchains as distribution channels. The previous Keynote was talking about distribution. And people were saying, like, well, I have this project I want people to invest in. And you know what? There's a lot of people who have a lot of money that just made a lot of money in crypto. They're on a blockchain. And so if I do my primary offering on a blockchain, then surely these people who have made all this speculative gain in all these crazy assets, they will want to buy my very, very safe asset or the second. So that was, I would say, one of the primary reasons why they were doing it this way. It wasn't the only reason. I think the technology can do more than that. The technology can provide lower friction. It can provide global access. There's a lot of things it can do. It does a little bit, I would say, for issuers. I think it can potentially do more for holders if it can get to a real network. However, that's not really what they were looking for. They were looking at primary issuance, not secondary trading, even though the technology is fantastic for trading. That's been one of the main use cases of blockchains. And they were also looking at so they were looking at long-tail assets. In some sense, you had like small assets, a lot of real estate. So like, oh, here's one real estate project, here's another real estate project. So you do that, and somehow you're going to split your liquidity against many different assets. There was also not a match between the type of assets that was being tokenized and the interest of the people on a blockchain. So, for instance, like you have people who are technology investors who were attracted to cryptocurrencies. You had people who were, thrill seekers wanting lots of volatility who were attracted to that. You had people who were attracted to commodities. And this didn't really fit this box. So you didn't have the investor profile that you wanted. You didn't have the liquidity. You didn't have the secondary trading. So I would say like this is not. I call this an impedance mismatch. And what I think is like really interesting is assets which have high barriers to entry. So they're currently very hard to access. A lot of people have said like, oh, let's tokenize gold. There's like zillions of tokenized gold product, but you can buy gold anywhere. So you want these assets who have high barrier to entry, limited price discovery. So like you don't really have a good established market. You can create one, and which also appeal to this class of investors. And so in 2021, I realized that Uranium was the best asset for doing this. And let's look at why. One is an exciting asset. There are several trends which are, I would say, pushing nuclear power. One is a changing attitude. So there was a very strong anti-nuclear movement that came out of the Cold War, fear of nuclear proliferation, fear of radioactive waste. That basically has shifted, and if you look at younger generations are much more open to nuclear power because they see carbon-based sources of energy as much more of a threat to the environment than nuclear. So first you have shifting attitudes toward nuclear power. That's a big thing. Then we've seen also the fragility of gas supply chains, for example, in Europe, which has pushed some countries to take another look at nuclear power. And third, we now have a projected massive increase in electric demand due to AI. And so now people are actually starting to rebuild nuclear power plants. Like a lot of new nuclear projects are starting, and uranium is the fuel for all of that. So
big demand for big tech for uranium. It was a big asset, and you could only trade it in very large amounts. You had to be buying $4 million clips of spot uranium, and there was just like no well-established marketplace for doing that. You had like OTC markets for $4 million if you have an account with Cameco, which is this big depository. You can buy it there, but low liquidity. You had ETFs, but the ETFs would not actually track the underlier. So you could buy the spot ETF, for example, and you would see that it would have a discount of 15% to the spot going on for like periods of 6 months. So not a lot of very good option, even though it's a very, very massively important asset. And I would say also, in terms of impedance match, looking at the crypto market, you have people who essentially, when they buy cryptocurrencies, what are they buying? They're buying a technologically flavored commodity. And that is what uranium is doing. It's a commodity, but of course it's also a technological play. So you have all of these aspects. So what do we have currently in the uranium market? Opaque pricing. So you don't really see a lot of the trade. Most of the trades are OTC. So this is not really good for price discovery. You don't have like one electronic market where you can really see the price of uranium and how it's traded. There's limited liquidity. It's a lot of long-term contracts. There's not really a good access to the market. That in turn breeds price volatility, and that in turn also creates supply chain complexity for people who want to take delivery. So how are we changing this? So XU308, which you can is the name of the token, which you can get on uranium.io. It gives you beneficial ownership in physical uranium directly. So it enables 24/7 global trading. You can trade it at any time. It's available on RChex, which is an FCA-regulated exchange in the UK, and it's also available directly on a DApp. So there's a smart contracts that you can use to buy it 24/7. Flexible ownership. There's no minimum price. It's not $4 million. You could literally buy a penny out of it. So one token is roughly 1 ounce, which is about $4 now. But you could buy any smaller amount or any large amount. There's no asset management fees. It's only custody fees and only administration fees. So the price structure is quite accessible. There's complete transparency. You can see the whole ledger through the blockchain. There's reduced third-party risk because the custodian is directly, there's not a separate custodian. You're taking custody of your token, or you can refer to a separate custodian, and then the only other custodian you have to deal with, of course, is the depository, like Cameco, holding the actual U308s, and you can verify the ledger on the chain, and that's fairly straightforward to access and verify. So how does it work? So first, you make a decision to invest or buy uranium. So you can access it either with a centralized exchange or a decentralized exchange, which is the smart contract. There's a compliance system on the chain where the addresses are verified. So if somehow there's a suspicious address, the address may be blocked and KYC may be required, but that's not always, most of the time that's not necessary. And we have a bridge with a physical broker. So there's liquidity. There's a few $1 million right now of liquidity which are on chain, which are able to bridge the exchanges to the physical custodian. One of the questions that I often get with this is, hey, can you take the token and actually get physical delivery? And sometimes people ask it in a jocular fashion. They say like, oh, haha, can I get delivery of uranium? And the answer is, of course, yes. But. So if you couldn't, then the thing wouldn't track the price, right? If you can't convert it, no convertibility, no parity. That's a very important principle in finance. So you can. So how would it work? Well, the first thing is like you would take your token. You would go to the trustee and you would say, hey, dear trustee, I have this token. Please credit my account with Cameco, and that would be an increment of $4 million. But like here, credit my account. I want to have at the depository this many pounds of uranium. Okay, they do that. And then if you want to go further, you can show up with a truck, and then they will say, excuse me, sir, do you have a license to take delivery of this uranium? Are you running a power plant or something? And if the answer is no, then you will not take the delivery. But if the answer is yes, then absolutely you can do that. So it's very limited. Like the number of the number of parties who can legitimately take physical delivery is limited, but it is actually possible. So ultimately, there's always an arbitrage loop, which is possible, which is quite important. So Uranium.io is the first purpose-built uranium trading app. So it eliminates barriers to buying and selling uranium. It runs on Etherlink. What is Etherlink? So Etherlink is a EVM-compatible layer 2 built on top of Tezos. It's fast, fair, and nearly free. So fast because the blocks are under a second. Fair because there's no hard-coded sequencer. The sequencer is subject to governance. And nearly free because the fees are negligible. And then you can buy it in ounces rather than thousands of pounds, but even you can do a fractional ounce. Like really, the amounts are minimal. And so the project has been led by Trilitech, which is an adoption hub for Tezos in London. And it's being backed by industry players and by the Tezos Foundation. We've drawn from decades of experience in traditional finance and Web3 development. There's multiple partners. And we've partnered with Archax in the UK for regulatory compliance and the tokenization. Anyways, so key takeaways. Uranium is a great asset. It's really something worth looking at. It's way more interesting, I would say, than tokenized gold or tokenized silver. We've seen, if you want to buy gold, there's just so many ways to buy gold. You could buy physical gold, you could buy coins, you could buy ETFs. There's just so many different ways. You can't really do that with uranium. Like, how do you have an asset that's globally important and no way to trade it? Well, now there is, and you can do that on uranium.io. For a quick comparison, you see, we got all the green checks, and the other people, they don't have the green checks. That makes it better. No, joke aside, direct physical ownership of uranium. You don't get that with ETF. With ETF, you own a share in a fund. This is not a share in a fund. This is direct beneficial ownership of the uranium underlying. 24/7 online trading, again, not offered by other options. Global access, no minimum purchase, extremely fast settlement time, and price accuracy. So we have all of this, and that's, I would say, there's a lot of hype around blockchains, there's a lot of bullshit around blockchains, but I think one thing that they're really, really good at is actually making assets globally available. And here I think we're doing it, and we're doing it in an important way. All right, that's my presentation. Go check it out. Go to uranium.io. It's available now. It's running, and I hope you enjoy it. Thank you.